What's up, everyone? This is Boss Crypto Alex here today, bringing you guys a video on charting patterns. So hopefully before this, you guys have already watched the support resistance, trends, trend lines, Fibonacci's, all that good stuff. It'll definitely help you understand charting patterns if you've watched those first. Okay, so today we're going through two sets of charting patterns, which are continuation and reversal patterns, okay? And the continuation patterns will be the ascending triangle, the descending triangle, the symmetrical triangle, rectangles, and flags and pennants, right? And then for reversals, we have the rising wedge, the falling wedge, then we'll do double tops along with double bottoms, and the inverse head and shoulders and the regular head and shoulders. All right, and that should sum everything up just nicely. Oh yeah, and the continuation pattern I forgot is the cup and handle. I always forget that one. All right, so starting out, I'm just gonna be drawing on some blank chart today, guys. I considered just looking up a bunch of different charts that have examples, but a lot of them aren't perfect, and I figure why do that when I can just draw myself? It'll be quicker, easier for me, easier for you guys to visualize, hopefully. All right. So one thing to note, continuation patterns will always be, actually, I should be careful using the term always. More often than not, continuation patterns occur in trends that already exist, meaning they're more likely to occur in a trend that's already been identified as a trend. You know what I'm saying there, guys, right? I don't know if I should, deciding whether or not I want to rephrase that a little bit, but meaning if you have an uptrend already established, that's when you're more likely to see a continuation pattern than, as a reversal. Like the ascending triangle is the first continuation pattern we're talking about, and it can act and has acted for some assets at some times as reversals, but more often than not, continuation patterns are going to be in existing trends, and reversal patterns will happen at the end of one trend, switching it into another. Okay? Sorry, I should not say always. You got to be tricky saying always when you're a trader. Just like with support and resistance, always need potential there. Okay? So first up is going to be the ascending triangle. So in order to qualify as a continuation pattern, an established trend has to exist. However, because the ascending triangle is a bullish pattern, the length and duration of the current trend is not really as important as the robustness of the form. Okay, that's paramount. So the key to the ascending triangle is a horizontal resistance line where your trend is making higher highs, higher lows, and then all of a sudden your trend makes the exact same high as the previous higher high. Now, this is not a breakdown of trend or anything, but it's definitely like, a pit stop. Like you definitely stopped at the gas station here to reload, right? And then what happens is you make another higher low in front of the previous one. So still a valid trend, making higher lows, higher highs, but you stopped out for a second. And then the triangle is formed by the angular line between the higher lows, right? And then the higher lows ascend price into this tight resistance here, and you basically just converge to a peak. Or more often than not, it doesn't usually go to 6 or 7 touches. It can, but more often than not, on the third or fourth touch, you break out. Now, what's either going to happen is you're going to break the higher lows and break down. And I think that happens statistically like 30% of the time. But more often than not, you will break upwards above this resistance line. So you have sellers that are selling into this level each time, but the buyers are bringing it up and coming in higher each time as well. So you just kind of have bull versus bear getting tight there. And then you either have continuation or breakdown. So the way you play this is you either buying the higher lows, right? Or you're waiting for the breakout and you buy that, or buy a retest if you get that. right? And that is our first continuation pattern, the ascending triangle. All right, so duration-wise, these can range anywhere from a few weeks to many months, but the average pattern is going to last about 1 to 3 months, and they take time to develop. And you want to see volume contract typically as well. Okay, so when the upside breakout does occur, like right here, maybe you have some small volume bars, nothing too insane. But when you get the breakout, you want to see a nice big volume bar that's relatively larger than anything else you've been seeing during the raging period, right? If you've been ranging and getting just, meh volume throughout, you want to see a nice big volume on that breakout, showing that the buyers had strength when they pushed through this level. Because if it's really weak, it might just be a fake out, right? And in that case, you might want to wait a little bit of a short period of time to see if there's follow through, right? So that is the ascending triangle. And then next, in a downtrend, I guess I'll switch to red for it, just to keep visually attractive. Right, you're making lower lows and lower highs. That's a standard downtrend. When all of a sudden you make a subsequent lower low, but it's the same low, right? So you didn't break, it's not technically a lower low, but your trend is still lower lows and lower highs. So you're still in a downtrend. You just kind of, you just took a pit stop, right? You get some gas. And then, much like you're making higher lows and an uptrend, you're making lower highs, but the buyers keep holding up this floor until eventually they give out, right? And so you've got this triangle convergence on your support level, as opposed to your resistance level was what was being converged upon in the ascending triangle. In the same way, either you're playing on the short side at the lower highs, waiting for breakdowns, or you play the breakdown or the retest if you get one, right? That's how you trade the descending triangle. Same thing goes for volume. You want to see the sellers really push hard through that level, okay? We've actually got a good example of this that I can use. We'll go to Bitcoin. Right, and we actually see the breakdown has already happened too. So we've got these lower highs, right? Lower high, lower high, lower high, all near this resistance zone. And then the very last one was finally strong enough to break this descending triangle. Right, you got the same zone all the way from back here. And one could definitely argue that it started there on this wick. And so either one of these, either you drew the triangle at this level with all these touches, the close, this level, so on and so forth, and that was the breakdown you short, or this was the breakdown you short, either or, okay? Or you're identifying this floor early on. Maybe like right here, you're saying, okay, maybe we've got a descending triangle, and you see it later it broke out, but we're trying to think you were in this back here, right? You can short this breakdown. I'm sorry, I have all my indicators up here. It might be confusing for some of you that don't know what those are, but I'll definitely take those off here in a minute. Okay, but you can either short the trend as it's trending, the downtrend, and then once your pattern breaks, you can get more aggressive knowing that that pattern is broken. Okay, so that's the descending triangle. We're going to go ahead and hop back into our blank space. All right. Next up, we are going to do the symmetrical triangle. Okay, so same as the other two. This is going to happen more often than not in an established trend. Okay, so it should be at least a few months old. And the symmetrical triangle marks a consolidation period before continuing after the breakout. Okay, pretty much exactly the same as the other triangles we talked about. Go back to green here. So it can be in an uptrend or a downtrend. right? And you just here. I'm gonna draw the triangle before I actually do the lows. Okay. That's just where you bounce around in a symmetrical triangle like so, right? And the breakout, the difference between the other ones, right, is we were coming into horizontal support or resistance for the other ones, right? Whereas with this one, we're still making higher lows, but we've also started to put in lower highs, right? With the symmetrical triangle. So you're converging even more tightly there because you have two, you have your uptrend giving you one signal, but then this potential for a downtrend coming in right there, right? So then when you break that lower high right there, that's essentially invalidating that, and it's just a normal continuation, right? So that's your entry on symmetrical triangle. Likewise, on the downside, if you break down below the low, that's your short entry, okay? All right, so I believe that's all for triangles. Yeah, I'll do rectangle next, and then we'll hit the flag and the pennant and the cup and handle, okay? Oh, right. And for duration for a symmetrical triangle, same thing as the others, usually like a few weeks to a month, anywhere from a few weeks to up to like 6 months, honestly. It can really go on for a long time. It really just depends. It depends. Whew, that's rough. It depends on how wide the first drop is. Because if it's very wide, then you form a big range for your triangle, this is very poorly drawn, sorry. If you form a large range, then you have a large, Larnge, L-A-R-N-G-E. That's just a nightmare, guys. I'm sorry, I'm speaking over myself here. Let me retract. If you form a large range, right? The larger the range, the longer it could take to fill in, right? Does that make sense? Like for Bitcoin on that descending triangle, that took 10 months to play out for it to break down because the initial drop was from $20,000 to $6,000. And that drop was so large because the initial move was so large from a couple $100 to 20,000, right? So whereas if a stock goes up, 30% and then tries to continue, it's probably not going to take 10 months for a triangle to play out, right? Okay. But moving on to rectangles. Okay, we'll stick with the uptrend concept, but they can occur in downtrends too. The idea here is that one of your higher highs and one of your higher lows starts to form support and resistance. So you're not making higher highs anymore, but you're not making lower lows yet. So you really have just formed a trading range, right? That makes sense. So you're not ascending into it by any means, but you're not descending away from it. So as long as you hold that bottom level and stay below that top level, you're just in the trading range, right? And then when you break out, that's your entry, or on a retest, just like the others. Okay? So to draw it, all you need are really just two subsequent highs and two subsequent lows, and that's really it. Okay? As far as duration goes, rectangles can extend for, same as the others, a few weeks to many months. It really does just depend on that chart, right? And the breakout direction is more often than not in the direction that the trend occurs, or the trend, right, exists in, you know what I'm saying? But the key to watch for is the break of either higher highs or higher lows, right? Whichever one you break, that's the play you want to be in. You want to be on the long side while it's in an uptrend, but if it doesn't continue, if it happens to be a reversal, that's when you'd want to flip, okay? So that is rectangles. And then this will be a good switch into flags and pennants. So a flag is really just a small rectangle pattern, but it slopes against the previous trend. Okay, so let me show you what I'm talking about here. All right. So we have our uptrend. Right, and then this is what a flag would look like. Just an angled rectangle. And it's going downwards, it's sloped downwards when we're in an uptrend. Okay. And here's how price would look in a flag, right? You make a low, a higher low relative to here, but now you put in a lower high relative to that recent high, and you put in a lower low relative to here. You're still making higher lows, right? So still in a bull trend, but you've made a short-term lower low and a short-term lower high. And not to get technical, but this is something known as a complex pullback, right? Where these are simple pullbacks where it's one leg, right? One move back down, and a complex pullback is two moves. Okay, so a lot of traders will be like, "Oh, that's bear, right? It's bearish. I'm shorting now, short and heavy here," and they're short and heavy here when they should be getting ready to long near the bounce. And then the way to play this is watch for a higher low, right? If you get a higher low, you can enter there, or you can wait till the safe move and enter after the breakout above the resistance line. Or better yet, wait and see if you even get a retest, right? Because it's possible you come up into this resistance and you just tank down back down to the support level, right? So the safe move is by the breakout or by the retest. But if you made a lower low and this is going to break out upwards, right? If you're long, if you're looking to long, you're obviously hoping it's going to go upwards. So if it's going to do that, it's going to put in a higher low first. So that's what you want to watch for if you really want to get an early entry. Okay. So that is a flag. And then a pennant is a small symmetrical triangle that begins wide and converges as the pattern grows. Okay. Erase this. Got our uptrend. All right, we'll do a downtrend just to change it up because these both work in uptrends and downtrends. All right, and then a pennant is going to be. Let me make sure I have a picture of this. I always end up drawing these as wedges, but one thing I forgot to note about flags and pennants, unlike triangles and rectangles, because flags and pennants are usually too short in duration to actually have reaction highs and reaction lows, the price action just needs to be contained within two parallel trend lines. Okay, so you don't have to have, right? This is a symmetrical triangle right here, and price needs to be doing this. It needs to be touching, right? Price can't stop here, right? Because then this trend line does not exist. Whereas what we're about to see here, let me get rid of this, is you can have a pennant like this where price is just kind of chilling inside, right? That's a valid pennant, but that's not a valid symmetrical triangle, right? Well, I mean, no, it's not, because that's more like a descending. That's not a valid triangle at all. Okay, so it was a fine pennant though, right? So pennant will just be kind of like a symmetrical triangle, but with price just converging in it. And the angle is going to be against your current trend, right? So if we were in a downtrend here, the angle of it is probably going to be more upwards. That makes sense? But they usually break down. Okay, they usually continue the trend that they're in because they're continuation patterns. All right. But even if the slope is neutral or in the same direction, actually in the same direction, that'll be a reversal pattern. We'll talk about that in just a minute. We got one more pattern here, which is the cup and handle. Okay. So basically it looks like that. It's a rounded bottom. So, you're making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And then, you stop making lower lows. You're in a trading range, maybe a rectangle or something on lower time frames. And you break out from that. You're making higher lows, higher highs. Maybe you have a flag. and you break out and you go higher and higher. And then you have, maybe another flag, a complex pullback, maybe it's a bit further. You stop making lower lows, you break out of your next short-term trading range, and then you fly up, right? And the breakout of a cup and handle is breaking that top line above whatever that high is you put in here, okay? I guess maybe we can look at a chart for this one too. It's kind of, there's a lot of them in Bitcoin, but they're just, I don't like cup and handles just because, I don't know. I think it's much more important to focus on just the higher lows and higher highs. But if you guys want to trade them, use the Fibonacci from the bottom of the cup to the top of the handle. And then you're going to want to watch your fib levels for that higher low where the handle is going to form. After you break below really even the 382, it's not really valid anymore, right? Because this is not a cup and handle, okay? That's not a cup and handle. That's a cup and handle, right? So you don't want to get like a 50, 60, 70% retrace. That's just another higher low, right? And it's more likely that is going to be something like an ascending triangle, okay? But if you get them nice and rounded, it could be a cup and handle. One thing to know about the cup and handle as opposed to a few of the others is that this can really extend for a long time, anywhere from 1 to 6 months, as opposed to like the pennant and the flag, which really don't last that long, right? Because it just really depends on how big the cup is, right? If this cup is over 6 months, then the handle could be another 4 months, right? That's almost a year-long cup and handle. It really just depends on the asset. Okay. So the key, I know I might not explain that one really well. It's because I just don't use it that much. But the key thing about the cup and handle is that this pullback, right? This is normally going to be some kind of resistance line, right here, right? Or maybe let's scratch that. Let's think of this as an uptrend instead. Let's go back to how we were doing on the original examples. All right, you're in an uptrend. Price comes down. Instead of a sharp bottom, get a rounded bottom. And then instead of making a higher high, you make the same level high. And then you just make a higher low on the pullback and break through. And that's really as simple as it is. Either you buy the breakout or you buy the higher low on the right side of the higher low with a stop below. Sorry, my first explanation was not that good. I should have just done it like this. Yeah, that's a cup and handle, right? And that, I guess, is the last of the continuation patterns.